A very good morning to you traders. Mark here from the day trading room. Time is 11:30 in the morning London time. Just sitting here preparing for the open. I'm just seeing the data come out from the UK, and we've got some data coming out later, so it should be interesting. Uh, First video for a while, not done one for a while. I've been working hard to try and get this program ready to release for you guys. Um, Always a challenge to get stuff like this done. It's a challenge to make sure that it's exactly as I want it, covering all the topics I want without rambling on and making it unnecessarily long. So yeah, hoping that's going to be ready. No specific date on it yet. I know a lot of people have asked about it, but I'm really excited about it because it is literally trying to get all of my experiences and everything and all my setups and the whole thing just into one program, and to do that and to have it flow nicely and to have it categorized nicely, it's a bit of a challenge, but I'll definitely will get there, and we'll get that out as soon as I can. But I do want it to be perfect. But what I want to cover in this video really is just the last few days of trading. There's some good stuff, and I wasn't going to do a video. I was going to carry on focusing on what I was doing, but I just wanted to get it out there because times are changing a little bit. Not times are changing, but we can see the market changing very slightly. Got some new opportunities out there, and just to give you guys a heads up of what I see is working and a couple of trades that I've been taking. Say very low frequency. Well, I mean low frequency. I mean not many trades per day for me at the moment, but I quite like that. I quite like the fact that I'm waiting for that prime opportunity, whichever market that may be in, taking it, extracting some good profit from the market, and then just sitting back. We're looking for another opportunity, and if it's not there, just stepping off and then carrying on with the program. So it's working well for me. But there are some great opportunities out there, and I've had some emails from people who said they've caught some lovely moves. So let's just point out some stuff that I've spotted anyway. Crude oil, I'm going to start with first. That was a good one. We started off well yesterday. Let's just load this up. Started off well yesterday, and we just sort of flatlined a little bit. But as I've mentioned before with crude oil, it's a funny thing. And actually, what I wanted to say very quickly, I'm just going to flick this to a 60-minute because the moment that I'm trading crude oil is I'm taking the trade with normal size, and I'm scaling very aggressively. I'm scaling aggressively into the high if there's a flag pattern or whatever I'm taking, or it's the first tape pulse in my direction. I'm scaling aggressively, and then I'm just scaling out into the next tape pulses, whatever they may be. I'm not fixing it at saying it's 20, 30, 40, 50 cents, whatever. I'm just giving what the market offers. So if I'm in and it pulses up 12 cents, great, I take my first scale off. If it's just pulsing up 10, I'm taking off 10. If it's giving me a quick 20, I'm taking off 20. So that's the first scale. Second scale into the pulses, or if it's starting to pause a little bit, I might take a little few off. But in terms of trailers, I'm only trailing a tenth. Okay, so most of the time I'm getting stopped out on the 10th, but I'm only trailing a tenth at the moment of the position, because we're in this multi-week range. This is a 60-minute here, so why I wanted to bring it up here, just to explain really why I'm positioning like that, and why I'm trading crude oil like that. If you could consider, I'm on my laptop here, so I haven't got my lines in already. But if this is your weekly or several week range here, while we're in this range, for me, it doesn't make sense to hold more of a trailer. If we're in a sort of breakout territory and in fresh territory, what I would do is what I always do. Say if we were back around here, I would look to take the short term take re-entry based on the pattern and what have you. I would look to scale, take the risk off on the first pulse, and then I would become a little bit less aggressive with the scaling. I'd look to run maybe a third of the position, maybe a little bit more. Just to try and squeeze more, because you're in that environment where there's possibility of it giving you 50 cents, 100 cents on the next pulse, and that was very feasible. But at the moment, because we're in this range, to me, the likelihood of it pushing another 100 cents in my favor, 50 cents in my favor, is low. I'd rather take what's on the table, leave a little tenth to run. If I get the runner, great, I get a little bit of extra bonus. If I don't, I'm not too bothered. The premise of the trade is really to take that little tape read. So let's talk about little bits and pieces that are happening on oil, and then we'll move on to the Dow. And I just want to show you finally Apple. So we're going crude oil. It's the flag stuff again, guys. Watch the open. The open. I mean the 2 o'clock London time. We're getting this drive off the open. We had it yesterday, and we had it the day before. It's to the downside. There we are. Just mark that off for you to make it clear. So keep an eye on that, because we're getting the drive, and you're seeing who's in charge. And we're looking for, what I'm looking for, you can look for whatever you like, but what I'm looking for is the drive, the pause. I just want to see what the reaction is to the drive. If we're driving lower, get a quick drawing pen out, why not? If we're driving lower and popping straight back up, that's no good. Drive lower, watch your tape, Are we holding at the lows? What's happening at the lows? You're likely going to meet a few residual buyers, a few algos stepping in there, just because it's moved quite a lot, and that's just the situation you get when you get a large movement. You're going to get people, mean reversion type guys stepping in who are doing a bit of volume, and it's just what happens to those guys, whether they get filled, whether they get cleared out, whatever, as to where we go next. So if you're holding down there and you're flagging a little bit, I'm looking for that continuation to carry on in direction. As I said, scaling aggressively, not looking for anything fantastic out of it, but it's been quite a nice little setup. And if I just find yesterday's trade, yesterday was okay. We've got the flag there. We pushed up. That was really aggressive pop. This little, I have talked about this before actually. It's not quite as clean as it was, but you know what? Setups never are something I'm talking about a lot in the program. How you sort of adjust your setups to different market conditions. You've got your core strategy, but you tweak it slightly, and what do we look for? So we tweak it so we're not getting caught out, so we're maximising the opportunities that are on the table and not getting left behind. But anyway, I'm going ahead of myself there a bit. So I talked about this sort of flag pattern before. You've got the push up, you've got a lot of trap shorts, got a lot of people surprised by that move there. You get the flag, it puts in a base, just goes through by a tick or two, and then you get the drive up. It wasn't much, if I'm honest. It wasn't much. By the time you're in and you've taken excuse me, you've taken the trade and you've taken a bit off the table. There's not a lot in there. There's 20 cents, 20 to 25 cents at the most, really, and then it just drifted down. And we dipped under. We got this little dip under, and I did tweet out at some point, it's going to be interesting to see what happens to this dip, because we had some data coming out at 3 o'clock. So I think everyone's just waiting for that. But I just wanted to see what was going to happen with this dip. I was tempted to buy it after the data, very, very tempted, because we dipped, we'd held, we hadn't then revisited. Let me get rid of that. Drawing pen, put a fresh one out. We hadn't then revisited that low after the data, and we had a little bit of a bullish bias from that 2 o'clock. So I thought I'd revisit it to the high, but I didn't take it, didn't fancy it, didn't take it. And that was it for me, crude oil. Just taking those little flags, pushes, and then when we realise it's running out of puff a little bit, just stepping back, because I don't want to get caught out on crude oil. High probability setups, that's all I'm looking for. I'm not looking to be predictive, I'm not looking to be clever. The only time I'm making predictions is if I'm pinpointing targets. And by the way, that 104, that was another reason why not to get too cute with that and too clever. You take it off, you take the break, and in actual fact, I'm just remembering now the tape, we pop through once, pop through twice, and then we're popping through, and it's not blowing. I'm looking for that blow off to get the last off, just not getting it. So I'm ending up scaling out into the 03s, 02s, just because we haven't got that 20 cent, 30 cent blow that I like to see through the whole number, to say, great, there goes another third of the position, now let's run that 10th, but I didn't get it. So what was I saying? The high probability setups. That's what I'm looking for, guys, on crude oil, just the high probability stuff. I'm not trying to be predictive. That was it. What I was saying about was, prediction wise, that's only for the final target. So when we're in a little bit of better environment on crude oil, and I've got a third left, then that's when I'm looking at my higher time frames and going, okay, well, that's my final target, where that's 100 cents up, 200. May not get there, but that's what allows me to make the most and make the trade pay me for that last third. Take reading to get in, take reading to manage risk, get the trade off, and then I've got that third there. And if it's going my way, then I've got that final target to make as much as I can from it. But as we're not in that environment yet, not really feasible. Anything else to talk about in crude oil? I'm just going to scan through quickly. Oh, that 102.20 level, guys, that was on the tape. I did tweet that out. If you're not following me on Twitter, do it. I'm not tweeting that actively. I'm trying to get more into it. I do quite like the idea of it. But you've got to really have seen some of my videos and being sort of tuned with the way that I trade to understand some of the tweets, because you've got the character limit and all that stuff, and I'm quickly tweeting out bits and pieces. And a couple of times I mentioned about the 5 minute, how long we're pausing for on crude. And that's something I find interesting. I'll quickly talk about that. The 5 minute pause before the drive. It's not always 5 minute, but it pays to count the bars between of the flag before the next drive. Because if you can get a third and fourth drive, unusual, but at least then you know you've got some sort of reference point. Anyway, this is what I was talking about, the 5 minute pause, 5 minutes drive, 5 minutes, and then we popped away. And we just struggled with this 102.20 level. It was so key on the tape. It just was batting back and forth, back and forth, back and forth, back and forth. And what was interesting, which cemented the fact that it was such a key level, and that people were playing around it, whoever was playing, we got the algos, whatever, you were getting 20-cent moves either side. So 20 cents to the downside was taking us to 102, the key level, and 20 cents to the upside, we're going to 102.40. So you almost bracketed that, and if you weren't looking at the tape, it quite a while until that started to appear on the 1 minute. But then it gave you sort of a bit of structure to it, and you could start to see what the effect was as we drove to the lows. When we double bottoms, how far up we got when we pushed up, and it was a little bit choppy and sloppy. It looked quite good to start off with. That was a good little setup. The drive, the flag, the second drive. Didn't get that flush through 102 that you'd like, so you're out waiting for the next one. There was a little opportunity here as we pushed up and we pushed down. It was risk off, but that was it. Risk off, and it ended up being not a great trade, because it was risk off, came back, and I took it out. I'm not hesitating with Crude. I'm not going to mess about, because it can snap back and bite your head off. If you get the risk off, if it comes back, don't let that one turn into a loser. Be another opportunity for it later. So that didn't work out quite as well as we'd like, but it wasn't a loser, so no problem. Not sweating that one. So yeah, interesting stuff on crude oil. Don't think I've got much more to talk about. I want to move over to the YM. Now, I'm not done much on the YM, if I'm honest. And actually, what I'm going to do is I'm going to show you the Indu. Just because every time I look at it and I think it looks a great setup, and it is a great setup half the time, I'm looking at it thinking, that's really good. I'm just going to stick my 13,000 on here. That's what I'm going to talk about today. I just look at it and I just don't like the action. We had that push to 13,000, the retracement, and then again it was the same issue with the data, and I thought, yeah, the data trade, I'll talk about that. I talk about that in the program. It's not the reprice, it's the different one. I didn't take it just because the range is so low, and even if you're right, the first scale taking so long, and I just sort of, and this was a nice one actually, the way we pushed down to 13,000 at 6 o'clock on the dot, London time, and then just started to lift back up. But there's not enough meat in the trade for me. It's so slow at that time. I'm looking to really take at least 10 on the first scale on the Dow, and if I'm having to wait 10 minutes, 15 minutes for that, my edge starts to be diminished. I like the setup. I like the fact that we drive up, we rolled over, we pulled back to a key level. Not only is it a key level in terms of 13,000 psychological, it had proven itself earlier as a key level. It's proven itself over the week as a key level. So it's not a bad little trade. We unwound a little bit, find a little bit of support, take a little trade and push it back up. But I just didn't take it because the range for me is just so low, and just didn't fancy sitting there for an hour to scrape out 15 ticks or so. So didn't take it. But that's, it's funny, the Dow at the moment is sort of being a bit bursty. You get days of great action. The other day, we had tick pullbacks. I'm going to see if I can put this in. Let me see if I can get the tick chart. I'm going to pause this a second and bring the chart in with the ticks. Okay, so this is the chart I was looking for, with the ticks. When you get days like this is beautiful for traders. This is the stuff we wait for. So, when I see days where I'm thinking, might be able to get 10 or 15, I just think no. It's not the edge. The edge is action, it's movement, it's having the opportunity to get a lot more out of the trade. That's what it's about. It's using the ticks, it's using your tape, it's using your shorter time frames, it's comparing it to your higher time frames. It's just getting with the flow, spotting institutional flow, spotting weak retail traders panicking. That's the edge. Strike while that's hot. And this was a perfect example. This was a lovely data trade to Dow, and we hadn't had it for a while, and it was nice to see it for a change. It really was nice to see it. The classic guys, drive lower, good volume, pushing through the low, holding, flagging through the low, and a tick pull back to zero. I love those trades. They are fantastic. Drive lower, let it drive, sit back, watch it, finds a bit of support, pushes back up. There's your ticks. Got a nice low cluster of ticks as well. Pulls back to zero. If you need that guidance, look on your tape, and then bang, you're straight in there with a lovely scalp trade. And not only that, we got it to the upside because it caught everybody out, sucking everybody in, even tried to consolidate. I'm making a right mess of that. Let me get the drawing pen out again. Even tried to consolidate just below that low here, and then bang, up we went. Ticks were staying firm. Very good, not very nice that day for the ticks. Very nice indeed. When they're staying high for several minutes, when they're staying low for several minutes, not probing the zero, you've got to pay attention to them. This cluster here, if you're watching that and you saw that we were getting that, the fact that we weren't dipping below zero, you've got to start to think, at least stay away from the shorts. At least say, okay, ticks, that means that people are hitting those offers. People are hitting those offers in the stocks, bids aren't being hit. Now there may be residual algo sitting on the offers, which is why the market's not moving up. That's why, but they're either going to get hit and they're going to get cleared out, or we're going to move down. But then we know that there's a little bit of demand more than supply at that point in time. So wait until it turns to take the short, rather than trying to be clever and taking the short. Whereas most people would be looking for the pushback to the support level to take the short. Just the ticks gave that extra clue to say, okay, you know what? If I'm still interested in the short, which is perfectly valid, there's no reason not to think still short. But let's just wait until they start coming down here a little bit. You might give up a little bit of value in the trade, but you're going to have a little bit more high probability on your side, and it's also going to keep you from getting caught out. And then again, we had just the ticks pullbacks to the high side. Fantastic. I love them, love them, love them. I really do like this sort of stuff. There's your tick pullback to zero. Not that much meat in that, but again, it's the same type of trade. We took out low, took out high, tick pullbacks. This one hardly pullbacked at all, but hats off to you if you got that, because that was a nice little burst there. So yeah, ticks are great. They're fantastic on the way. I'm going to move on very quickly now to Apple, because this needs to be... I'm going to get rid of this, put it here. This should be printed out as the reprice trade, and I go through it a lot in depth, but I'm going to talk about it briefly here because I have talked about it before, so it's not a new one that I'm not prepared to share with you guys. The reprice trade. This is about as good as it gets if you're from a reprice point of view. The reprice trade, if you don't know it, is take the first pause, the second pullback, wait for the third cycle. And here we had it. It was just textbook stuff, absolutely textbook. And it's not, if you're a futures trader, this is what you want to see after data, non-farm payrolls, interest rates, whatever. You get the drive up. I like to see normally 2 or 3 holding, but the fact that it just didn't dip, just didn't dip there and then went again. What you're looking for is one, the pause or the flag or the very short-term pullback. And the distance of that pullback on the length of the pause indicates the strength. If you're taking that, you've got to be on your toes on the tape. That's a real tape read type trade. That you've got to be on the ball with your tape to take that one. Otherwise, wait for the second one. The second one is a slightly deeper pullback. Look how shallow it even was. This one here is number 2. Your second pullback is normally a little bit deeper than number 1. So you're not just taking a pause, you're waiting for the turn. You're not buying. On number 1, you're buying on the dip. The drive, you're buying into the dip. Okay, on number 2, you're waiting for the dip to finish, and then you're looking to buy as it pushes up. So you can use that low as a stop. Let me clear that out of the way. So there's your buy as it pushes back up, and there's your just under there is your stop, just in case. That's your number 2. And number 3 is normally a deeper, longer term. Now this is a bit different, obviously, with Apple because it's after hours and everyone's done what they need to do. But generally, this is pretty technical classic stuff. You've got the 1, 2, and 3. This is the deeper one. You don't want to get involved in this. You want to wait now for this one. I know some people use like a stochastic or some sort of oscillator down there. If that's your thing, fine. That doesn't look right. That would obviously be low to coincide with that, but you get the point. But anyway, there's your 1, there's your 2, first pause, second pullback, third deeper cycle. And that's just indicating a good, strong reprice market. When I say repriced, I mean something that's fundamentally changed the value of that market or that stock. So oil inventories, non-farm payrolls for ESYM, oil inventories for CL, gas inventories, stocks, obviously earnings, whatever it may be. When we've got a lot of players looking to trade that in one direction because something has fundamentally changed the valuation of that market or perceived to be changed the valuation of that market. That's your reprice trade. Your first pause, your second short-term pullback, your third deeper pullback. Take whichever one you like. As I say, no advice intended. Must make sure I've got the disclaimers out there. Trading is risky. I'm not suggesting you do this. I'm just showing you a pattern that you could take and the pattern that I like to take. So first pullback, second deeper pullback, third cycle. That's the classic reprice setup. Anyway, that's all I've got for you guys. A little bit a few markets covered today in this video. Probably won't do another video now for a while. Going to concentrate on getting this program done, and as soon as it's done, there'll be a video out there telling you it's launched. Go and have a look, and we'll show you what's in there. And got a few extra little bonuses as well. They're going to come out with that. So really excited, looking forward to get that out. I know it's going to make some traders break through that barrier and get to where they want to be, which is what it's all about. It's what it's all about. Okay, guys, take care. Keep that risk managed, please, and don't forget, trading's risky, so you need to keep that risk managed if you're going to trade. Not suitable for everyone, but keep on top of that risk. Okay, take care, guys.